So far, 2021 has been a roller coaster of a year for Wall Street. Earlier this year, struggling businesses GameStop and AMC Entertainment Holdings saw their stock prices skyrocket overnight, thanks to a short squeeze initiated by a group of investors on Reddit. Individual investors glued to social media helped push the shares of another new company name, Clover Health, up more than 100% on Tuesday. Yet when it comes to the broader markets, the question on many people's lips now is, what's the next big story? In this video, we'll try to give you a better understanding of what's really going on. What are meme stocks? Meme stocks are essentially stocks that gain popularity online. Social media platforms like Reddit and Twitter have an increasingly significant role in how people invest, and when certain groups, like Reddit's Wall Street Bets community, promote a certain stock, its price can soar. A meme stock isn't as easily defined as a growth or value stock, so to give it a definitive categorization would be inappropriate. Nor would actually categorizing it alongside growth and value stocks. They won't be found in textbooks anytime soon, but to overlook their impact could potentially be an expensive oversight. Some people can make a lot of money investing in meme stocks. However, they're not the right investment for many people. Some of the common characteristics meme stocks share are they're usually overpriced and experience spikes of rapid growth in short spaces of time. Popular amongst millennials and Gen Z, they are prone to high volatility with valuations based around potential rather than financials, or in GameStop's case, not potential at all but simply taking advantage of the system. How is this happening? Once the pandemic swept across the United States, people were forced to stay home, and there were significant layoffs nationwide. With all of this spare time, the incoming stimulus checks, and the rise of platforms like Robinhood and Webull, it became more accessible than ever for retail investors to engage in the marketplace. Combined with communication on social and messaging platforms like Reddit, TikTok, YouTube, Discord, and Telegram, there was an opportunity to force coordinated buys or sells for certain stocks. There was a similar effect in the market in the late 1990s when the dot-com era began to boom. StockTwits, a social media site much like a version of Twitter dedicated solely to stocks, has millions of members, while subreddits Stocks and Investing Boast are growing daily. These numbers, along with the 6.3 million self-proclaimed degenerates which make up the now infamous Wall Street Bets subreddit, hold some significant clout in molding market sentiment. Should you buy meme stocks? The truth is that not all meme stocks are to be treated as pariahs. Take Lemonade, LMND, and Beyond Meat, BIND, for example. At the beginning of June 2021, these two got caught up in yet another Reddit-induced mania, sending share prices soaring. The issue here is that their prices could soon outpace their fundamentals, setting investors up for disappointment at their next earnings call, and resulting in selling. While it's possible to see substantial earnings with meme stocks, it's also important to make sure you know what you're getting into. The biggest risk is that they're unpredictable. Often, their stock prices are based more on online hype than the company's underlying business fundamentals. The more people invest in a stock, the higher its price rises. Investors on social media can artificially inflate prices by convincing as many people as possible to invest in a particular stock. Then the more the stock price rises, the more people want in on it. That causes the price to climb even higher, and the cycle continues. The problem arises when the price inevitably falls. There is a chance that once people begin interacting and traveling as the threat of COVID-19 starts to lessen, that these stocks will become less relevant in the marketplace. However, later institutions for many years have been using this technique to experience higher gains. Unless specific regulations are passed to forbid this type of trading, you have to believe that retail investors will continue to execute these trades. If you do want to invest in these stocks, it is recommended to pay attention to Reddit and YouTube. Because so much of the demand is driven by these platforms, it is essential to keep a pulse on their chatter, especially if you are interested in being ahead of the market and knowing ideal times to sell. If you want to invest, understanding the Reddit stock cycle is essential to support at the right time to get the best return possible. If you have any further questions, make sure you leave a comment below. If you'd like more daily finance content, then make sure you hit that subscribe button to join our community of aspiring entrepreneurs and investors.